Hey everybody, welcome back. Well, wild day to say the least. We can see the spike up. We're going to talk about that. We really have to focus on that close. You see how you're at that 50.46 and you closed with a lower low. Do not mistake what today was, and we're going to talk about how you could notify this and see this way earlier than it happened. We're going to get into some patterns, which people have been asking about again, and what specifically happened with the Fed speech today and when we finally saw the selling and why that's important. So there's a lot to go over. We're going to jump right into it. First and foremost, the ES. You're forming a pendant. There's really no way to say it. We talked about it yesterday in some detail, and we talked about that this was probably coming. Now, again, no one ever really knows what's coming. You make your best estimate and you play the hand that you're dealt. That's really all you're doing, right? That's all you can do. But we talked about this pendant that's there, and again, for those that don't know, you just kind of go in here. You could actually click right in here and hit hide, and that would hide this. I'm not going to do it all right now, but what you want to watch is just that undercut right there, and you're starting to break. And this is important because you're getting a direction. You might not like the direction that you're getting, but you're getting one. And here again, we're seeing the 55, the 22, and we are seeing the 12 right here. I like using the 12, the 22, and the 55. You should use what you're comfortable with. What we did see today, and I think that this is pertinent, this morning, we're going to get into what happened and when it happened, but I think what's pertinent is this to start with. If we look at the day, and let's get to that 8:15 level, because we had the ADP payrolls come out, and you can see that 8:30 level there pretty clearly right on the 5-minute, but let's drop this to a 1. So we're going to leave that there for a moment. And now we're going to go to 8:15 because this is pretty important and I want people to understand these moves. Where are we? There we are, right there. Perfect. And what you have there is you have the first movement that we saw on the ADP data. And what's important about that is that becomes a level. Now, that always becomes a level because that is where the high frequency traders will come and go on the first news that they get, right? So once you mark that off, you will note that if you use that level during the day, you usually will find that that level becomes significant. And you see how that level was tested not once, not twice, not 3 times, but 4 times today. And it all stemmed from where? The first 15-minute, 8:15, the ADP data that came out that let us know that non-farm payrolls might be higher than expected. We'll get more into that tomorrow. There's more to cover today, but please start marking these bars off. If you've been watching these videos for some time, you already know to do this. If you haven't been, now you know, and welcome. Please comment on these videos and share them if you find value. That's the only thing that I ask. I try to get into the most actionable, for those that are new, the most actionable information so that you can make the most informed decision with your skill set. And then along the ways, I try to get your skill set up as well. So let's just continue to jump into it. And these do stay unedited for those, again, that are new. So, okay, so here we have those levels. We're going to clear them off if you want to go watch how that's done again. Got a couple comments on that when we do the pre-market lives, the public ones every morning. So I figured to just cover it again. But you can't look at that and feel warm and fuzzy if you're long. Like you're being delusional at this point, right? You have to play the hand that you're dealt. This is what you're dealt. You have a 22.55 cross. You broke the 12. There's not a whole heck of a lot to say here. If you clean this all up and you just look at this particular bar, you closed lower than you opened, period. It's irrefutable. And you closed at a lower low. You can't look at this and go, oh, we're going to be fine tomorrow. Again, anything could happen. You had some pretty wild earnings tonight. You have some stocks up about 25%. It's pretty crazy out there right now. And you have some absolute dumpster fires, which we're going to get into. But 2 in particular that are just absolutely wild this evening. We're going to cover them. But if you look at this, this is everything. And what we're trying to do is we're trying to get you to understand where the key data points are, right? So then you have the speech. And why is this important? Now, we're going to get into all of this now, and then we're going to drill into some other things, but I want to just give you some key data points. So we all know by the CME Fed tool that they're not going to do anything, but you see that move at 1, and you start seeing this move that starts to pop out of here. There's ways to determine that. We can get into that in another video, but there's ways to determine the significance of that, and you do it through volatility. But here's that 2 o'clock. So there's your 2 o'clock mark. Now you have a bar that you can go after at 2 o'clock. You see the pullback, and what happens? 225, Itchy's going to speak, and then all of a sudden, what happens, right? Everything's great, or is it? And this is what's been happening, and you need to watch this. Institutions do not want us to know what they are doing. Specifically, do not want us to know what they are doing. If you've been following me for some time, you'll see me pull out a graph that's called the last hour. And what it does is it actually charts the last hour of the day, because that's when institutions move. Their moves have been so violent, and they've been getting out of positions. They don't want you to see what they're doing. So they're waiting as much as they can to the end of the day. Now, today there was so much selling, they couldn't wait to 350. But if you go and take a look at any chart, for example, you're down 1.5% in what? 30 minutes, right? It's just a free-for-all. Why is this important? Because if you understand the nuances during the day, then you can trade accordingly and know what the specific times are. Hence the 8:15, so you're going to know that you need to watch those in the morning, knowing that they're dumping at the end of the day. And there are actual statistics on this that you can actually benefit from and trade. We go over them in these videos all the time. So I want to give you that so you're armed with that tomorrow. You don't want to go into tomorrow not knowing what you're supposed to watch. If we watch the NQ for a second, same soup reheated, right? We all see the same pattern. Here's your flagpole, here's your pendant. I was going to say I'm a little teapot in a second, but and there's your pendant. And then you can see how you're breaking out right here and how you've undercut, right? So we can see what's going on. And if we overlay any indicator, any at all, it didn't get better, it got worse. For example, one of the things I've been showing you that is a great way to look at the world is go here on the daily, pull this down, and when we click on this, you'll see this MACD, and we talked about this histogram. Now you did change colors here a little bit, and that is a sign that maybe you're done. But I'd want to see a couple more days of this. Remember how we showed the color and the movement before and how that can tell you exactly what you need to do, right? Whether or not you're bottoming or not. This is pretty telltale, right? This called the bottom very, very clearly, and we talked about this about a week ago. You go watch Monday, Tuesday's video and just verify that for yourself. And that's the ES. If we get into the NQ, you should see something very similar to it. There you go, and there you are. So you want to take a look at that kind of stuff and just kind of see what's going on and going, okay, are we getting better or worse? We were trying to flip and we couldn't get above the zero line. And remember, the histogram is just a measurement of the actual MACD and the signal line. So then the question becomes, what else should we look at? Well, we lost everything essentially. And let me show you what I mean by that. I don't mean to be dramatic, but let's get into it. So here is the 1222 and we broke. And we can see right here, and we can see that break. But when you know this stuff and you know what's coming, you can actually benefit greatly from it, right? And this is really important for people to get. So I get asked this all the time, like, oh, the market's going to go down, we're not going to make money. No, once you have a direction, that's all you need. The worst time to make money is this. This is the worst time. I don't know why it keeps doing that. It just doesn't give me NQ. This is the worst time to try and make money. So if you just have a plain chart for a second and you have a base like you have like right in here, you actually broke right here. But when you have this kind of stuff, this is the worst because you're just locked and you don't have a direction. When you get a direction and you break down and you start setting up real patterns in the indexes, and those indexes actually match what's going on underneath, meaning so you can go index, sector, stock, right? You see where I'm going with this? Like when it all starts like aligning, and then you can just go index, sector, stock, that's when life gets like super easy because you already know, you're like, oh, I've cracked. Okay, well, that's easy. Here's the crack. Here's the retest. Let's go. It's on. So when you start to understand that stuff, you just start looking for the setups and then you just mark off your levels. Like one of the things that we did fairly well today, and we had a pretty good trading day to say the least. We should have had a really good trading day actually, but people should have had a really good trading day, quite frankly. But what you're doing is you're marking off these levels. Let me show you how you would do this. So what you would do with your own trading is you would go, okay, well, this is a significant level to me. And again, I use the 55. You should use what you're comfortable with. But I would mark it off like this and go, okay, well, this is where we're at. And based upon these levels, I really got to watch how we act right here and see how we, see how this goes. And we got to make sure of this and blah, blah, blah. So I have my levels marked off. So for me today, the big levels were 41, 42. Okay. And obviously these are going to move with time. You can see where you were and then where you were here. Let me show you what I mean by that. So I'm going to take this off for a second and watch these numbers over here. And what you're going to see is you were at 45 the day before, you were at 42, right? Now today you're at 47. You can see the 55 right there, and you can see how the 855 and where it is, and that was 58. So what you really were looking for yesterday, so when you see this, you can take advantage of it. Now, let me show you how you're doing this so you can watch this. And this is what we did today. It was one of the times, but there's a lot here, guys. And when you start connecting those dots, and again, I am index sector stock. I am top down trading. That's how I learned 25 years ago. It's how I trade. Wrong or right, whether you like it or not, I'm not really bottom up and top down. It works for me. But if you watch these levels that we had marked off, they worked absolutely perfectly. You actually even saw down here where the 829, eventually when you get to that as well. But here, watch this. So if you go and take a look right here, right, this wick right here, this is actually, if you mark that off right here, this is actually where we were on the 55, right? And that was the mark, and then you had the day before, and then that would have moved up the 55, right? So this whole area in here is a contention from people that have marked off that area from the day before. Now, why is this important? Watch this. Because they're leaving that mark there. Right? So when you know what they're looking for, right? You're looking at this area and everyone's using either the 50 or the 55. I use the 55. But watch, boom, breaks, holds, flips, undercut, wicks or what? Price rejection. What happens? The retest. Okay. Once you see that, it's on. What you know you already have, you have a control bar right here, which is already telling you, hey, I'm in control, not you. So then you mark that bar off and then you just kind of go from there and you can see how this plays out. Most people, what they'll do wrongly is they'll wait for the test, the retest, and then they're shorting here. No, you're missing a lot of the trade. You're waiting for the confirmation. You want to get positive slippage, not only on your exits as we talked about, but your entries, right? Here, take a look at this and then I'll follow through. This is us doing the trade live right here. All right, so you're bounced off of the 55. See if that holds or it doesn't. NVIDIA's holding for now. You're trying here, that's for sure. Man, I really wish it didn't look like that. Oh boy, there it goes. So the 850s are 16. I'm going to buy them, the puts, and I'm going to use the high of the day as a stop. So we got back there, we tested that area, and we failed. As soon as we get over there, I'm going to close it. It's going to cost me $1 to see if I'm right. So as soon as it does, I'm just going to get out. I'm not going to think about it. I'm just going to get right out of the way. So that doji down here, that is the 55. And so far we have held it, but I am surprised by that. Still getting wicks under that open. So it's not over. I'm not out of the woods, not by a long shot. Okay, that's what I'm looking for. See how that goes. So they're at 18 now. So if you want to take something out of them, go for it. I'm going to try and hang in there. I'm going to see if we break, because if we break, we timed it perfectly. Here you're up 10%. So if you wanted to pull something out, that's what you do. Those puts are at 20. I think you're going to crack. Does this become resistance? Does the 55 start becoming resistance? You got to watch this really carefully here. That starts becoming resistance. This thing's going to have a real problem. The whole market. That's why I'm so fixated here. You're already going to roll. Just watch. You make a lower low, that's going to get ugly. Yeah, I don't think that's going to make it, guys. Nope, not going to make it. So you're breaking the 55 here. So from that level, it's already up 5, 6. The hits just keep on rolling now. But if you shorted it, just pull money out on the way down. 24 on those puts. So there's your retest and there's your rejection. Market's not going up without NVIDIA, guys. There you go. So stock that I'm shorting in here, I'm covering as it pops down because I never know when the next rally is. So as it's breaking, I'm covering. Same thing with the puts. As those puts are making money, I'm covering into it. NVIDIA's, these puts, you're probably killing it. I'm still short stock as well. Up about 9 in the stock now. Getting wicks down here, guys. So those puts, you probably want to watch, see if it's going to flip. If it flips, then we'll probably close more of them. You leave the rest to break even if you want flipped. Go ahead. That was fun. All right, I'm out of the majority of those puts. I'm out of the majority of my short, and the rest will break even. Now, I hope you found that helpful. But what you're seeing here is what happens. Support becomes boom, retest, and then you're down. Retest, and then you're down. So let's say that you did miss it because you got scared up here or whatever. You just missed it. You mark off these levels and you just watch them. Oh, we're testing? Okay, we're going to put the trade back on. It doesn't mean you're going to get this, but it gives you an entry where you can actually map out your entry and exit. You can map out your whole trade right there. Let's just say that you missed this, and that's okay. I mean, I miss things all the time. If you miss it, you just find another spot. You put the trade on, you go from there. But what you want in this kind of environment is optimal. Index sector stock, they're all aligned. They're all breaking. Right? It was perfect. Now, why this is pertinent is you leave these levels there because what you'll see is they become areas of interest. So you come down, you see the retest, then the flip, right? Can't get over that same area all day. And then as soon as, so like, let's say that you're here and you're wanting to short, okay? As soon as you see this, right? And you can't get over, this was very clear for us that we cracked again. Here, let me show you. So these are actual notes from the room. So at this point I'm typing, we went live for the Fed meeting where Some of the gentlemen in the room, John will type for me, but at this point it was me. And what I'm doing is I'm watching the 2-year Treasury and I'm watching it sell off. Please remember this statement. The bond market will always act before the stock market after a Fed meeting. So you want to watch what yield's doing, right? Right now I want to watch the 2 because the 2 is going to move before the 10. It's just the way that it's been moving. It's just really, for whatever reason, I can get a better read off the 2. So I've been watching the 2 more than the 10 after these kinds of meetings. And for me, it's USO2Y. Something like that. It'll be like that on your system as well. But what I'm watching is that 320, and then you come here and go, okay, well, what happened there? 319. So once I see that, I already know that I'm looking to see if I'm really going to crack, right? Because we already know that they're selling bonds, and if they're selling bonds, if yield's going higher, they're going to sell equities. And we all know this from the equity risk premium that we went over yesterday, right? See how this is all connected? And you can take all this information, all the macro, all the fundamental, all the technical, right? Everything from the stool, even though somebody tried to steal the stool. You can take all this information and you can overlay it and make even day trading decisions based upon what's happening with it. It's all connected. So, all right, so then you start breaking, and then you just from there, we cracked, and then it's on like Donkey Kong, and you go from there. And then we know the last half hour, usually the last 10 minutes, and you can see that. It's just straight selling. And I wanted to point something out, whether it's NVIDIA, whether it's Microsoft, if you just look at the last 10 minutes, it tells you what institutions are doing. That's just institutional dumping at the end of the day, right? I mean, you're down $6, and then if you come here and look again at the end of the day, here it is again, 350. So that's what's going on. And then the question really was, well, what's changed? And to me, what's changed is they changed their statement. And I was kind of surprised that the market even blew it off, that even took a moment to blow this off. And I can show you this in line form. But even the fact, like here you are at that level, right? And then what happened here at 3 o'clock? Okay, and then we started selling off at 320. So by the time that this happened, right, what happens? So we already know they're selling the bond market. So if they're selling the bond market, we just know it's a matter of time before the stocks, the equities catch up with them. It's a precursor. Is it always going to work? No, nothing always works, right? There are no guarantees. If you want a guarantee, just go buy a toaster, I guess. I don't know what to tell you. But once you see this, you have a pretty good indication of what's going on, all right? It gives you another leg to look at, and that's very important. That's what you're looking for. You're constantly looking for edge. But let's talk about what did this and why they got giddy in here when he spoke. I have no idea. But imagine that you're watching this, USO2Y, why he's speaking. Do you think that this would give you an edge? Do you think this is something you might want to write down and mark for, I don't know, the rest of your life trading, so that you can watch the bond market and how they react? How do you think the market would have reacted if these sold off? If you're watching this, you have edge. You're constantly looking for edge. I hope you get it. Now, I want to go through some data, and I want to go through a couple of names you need to watch tomorrow. We'll keep this short and sweet. I say that, and then I go on a rant. And I appreciate your comments on these videos and your sharing, guys. You know, people always say, I can't believe all this information's free. I don't view it as free. I want your comments, and I hope that if you find value, you share it. I mean, I think of it that way. I think of it as a value exchange. It's really important to me that people learn. People say, why do I do this? It's really important to me that people actually learn what it takes to be successful at doing this. These are the notes, and this is the speech. And what they do is they show you it, and they will scratch out something, and then they'll show you what they're adding, right? So one of the most important things for me was this, and I was like, okay, we have an issue. Recent indications suggest that economic activity has been expanding. We got rid of that. Continued to expand at a solid pace. Job gains remain strong. In recent months, this is a really important line. In recent months, there has been lack of further progress towards the committee's 2% inflation objective. Let me be really clear about this statement, because this statement to me is pretty much everything here. And I do get into this level of detail. And there's a reason why everybody parses these levels. They go through this line by line, through verb or an adjective, because there's value in here. And this is what you need to take from this line. There is a lack. It doesn't say we're slowly making further progress. It's saying there has been a lack of further progress. It's very specific language. Okay, so how could you make further progress towards your 2% inflation objective? Okay, you could raise rates. There's certain things that they can do. There's certain levers that they can pull to do that. They can reduce the amount of what they're doing, or they call it quantitative easing or quantitative tightening, whatever they have on the balance sheet. Okay, so the committee judges that the risk achieving employment inflation goals are have moved into a better balance over the past year. Okay, so note how they went out in the year. They're no longer talking about the quarter. Now they're taking the year. They're not saying this quarter we made progress, because guess what you didn't do this year? In 24, you did not make progress on inflation. Go look at CPI. It goes like this. Okay, CPI is going up. It's not going down. That's a very important distinction for people to wrap their noodle around. We're going to segue so that people get this. So here you are, March 23, and we're at 4.9. And people are like, oh, we're at 3.4. Because here you were. This is CPI year over year, the actual numbers. Apologies, I just screenshotted it. Didn't have time to clean it up, but I want people to get this. It's important. So here we are, 4.9, 4.93, or 4.98, 9.3, 4, 2.9, little pop, right? Little pop. All right, so then up, and then we get a 3.2, a 3.1, and then what happens? December, you get a 3.35. Everyone says, oh, that's because it's seasonality. Okay, then we go to a 3.09. What happens? 3.09, 3.15, 3.48. Okay, since you began the year, you're going like this. You're not dropping anymore. If you take a look at these readings, you've been in the same area no matter what they've done. Really the same area no matter what they've done since July. Nothing's really changed. Okay, that's becoming an issue. And it's certainly going to become an issue. And that's one of the reasons why they're doing some of this stuff. And I think that should lean you into this. Beginning in June, the committee will slow the pace of decline of securities holdings by reducing the monthly redemption cap on Treasury securities from $60 billion to $25 billion. By reducing the monthly redemption cap from $60 billion to $25 billion, the committee will maintain the monthly redemption cap on agency debt and agency mortgages backed at $35 billion and will reinvest any principal excess of this cap to Treasury. The committee is strongly committed to its 2% objective. What about this says he's cutting rates? So when you spend the time and you read this, what they're really letting you do ahead of non-farm payrolls, and why we're jumping right into this is because now you have to understand that we're back to the stool. And just to be clear, there's only one stool. So if we look at this, remember, when we talk about the stool, I'm just going to draw it. Macro, fundamental, technical. Okay, here's the top. We're on this leg again. Technicals are broken, period. You can't look at this market technically and think that you're warm and fuzzy. You're not. The fundamentals, how are earnings going? They're not going great. Some companies are beating. We're going to go through a couple. Some are absolute dumpster fires. But if we take a look here on the macro, well, we're back to we need inflation to come down. Okay, and he did not do a great job explaining that today. It's just more or less the same. So non-farm payrolls are Friday. We had ADP come out today. You now know to use that little tool we went over earlier in the day. Unemployment, 3.8. ISM services, 51. Okay, you need to see this come down. All right, so this is where we're at. This is what's coming out on Friday. You're going to digest Thursday's number, and it's going to hit all the institutions tomorrow, and they're going to make their adjustments. Now, you are going to have individual names, and they are going to trade around. It's your responsibility as a trader to understand what's going to happen now. And you're going to say, well, what do you mean what's going to happen? You're fighting the tide right now, okay? One of the things that we talked about greatly was getting to a third standard deviation on the SPY, and getting to a third standard deviation on the Qs, and that means that you're going to revert to a mean, and you did. We went over this yesterday, and I just want to explain what happened. We've got to the mean, which is the yellow line, from the third standard deviation, and now you're rolling again. All right. So what do I mean you're fighting the tide? Well, when you look at names like CVNA, for example, this evening, that absolutely crushed. And to take a moment, I just want to go through this. They absolutely crushed. The way that they're spelling it out here does not do, to me, this justice, how bad this actually just destroyed all the numbers. So you can say anything you want, and if you want to spend the time, this conference call, looking at this tomorrow, I would not want to be short this because they knocked the cover off the ball. They raised earnings. They absolutely destroyed it. People are going to go out there and say they're cooking the books, they're doing this or that, whatever. They put the number up, it's going to squeeze people. All right. People can make their excuses, or you could trade the price. One makes you money, the other one makes you feel good about losing money. I don't know. I'd rather make money. You need to watch this name tomorrow. It's going to be pretty aggressive. Out of the two names, there were three names out there that people absolutely were betting the farm on. I'm going to give you two. The first was Amazon, that they were betting the farm on, that Amazon was going to absolutely crush. Institutions were. The second highest rated name that they had confidence in was Dash. I just caveat, I shorted this after hours. I still have a short position at the time of doing this. I don't know if I will have a short position at 8 p.m., but I feel the need to disclose that. So what happened here? Absolute dumpster fire. And you can see right here, okay, bigger loss than expected. Guided was a little off, and they're being hit by what? They're raising the minimum wage in a couple states, and orders in one state were off by $500,000 in a month because they just can't afford it. So this is going to start slowing down their progress. It is what it is. I'm not getting political over it. I'm just stating what they're doing. And so therefore, they're going to have some issues with deliveries. People are going to take this one on the chin tomorrow. And this could be bloody. So if you're looking for one that could be bloody and the other one that's going to just squeeze the shorts, I would look at those two names. That's it.